My name is Wilton, and I'm the creator of Fintel. And today I'm going to talk to you about Fintel data. I do this once a month, but this webinar once a month. Hang on one more second. I'm so sorry. Okay. Okay, here we are again. I do this once a month, and I talk about the data that we have, and kind of help people understand how best to use the site. I have my dog here today. He's trying to get out, so come over here and sit down. Sorry about that. So today I'm going to talk mostly about the options flow and the new unusual options data that we have. I've gone over all of the other data that we offer many times in the past. There's a number of webinars out there. Okay. There's a number of other webinars out there on YouTube where I'm talking about ownership data and insider trading data and so forth. So I don't want to go back and kind of rehash all of that, since there's a lot of that data around. What I want to focus on today is the new stuff. So let's get started, okay? And I apologize for all the technical difficulties today. Really sorry about that. I'm going to share my screen with you. It's going to be here. Okay. You guys should be able to see my dashboard right now. If you haven't, let me know. And what you'll see here is basically the kind of basic dashboard view. One of the things that we added, since we're talking about new features, one of the things that we added this last month is the ability to connect your broker accounts to Fintel. And this is a kind of a big deal for us. And I obviously use Fintel, and I do trading in my own accounts. And trying to keep my dashboard updated is a real pain in the neck, because I have to go make a trade and then I have to come to Fintel and kind of add something to my dashboard or remove it. So I've got my dashboard linked now to my accounts, and I can go through here and I can pick a my accounts, and it will tell me what do I have. So here I have VFH in one of my kids' accounts. The point is that when I make these trades in my own individual accounts or my other brokerage accounts, we're automatically going to update the stock list here, your dashboard, with those trades. This also includes stuff that I don't own as well, but it's a big time saver now, because I don't have to do any of this kind of adding or subtracting or modifying. And I hope you guys try this out, and I hope you guys get some benefit from this. And if there's any reasons why you're afraid to do this, or you wouldn't want to do this, I would love to hear why. Because I think this is a really great idea, and I want to understand why people might be resistant to it. So there you go with that. Now, in terms of the new data that we provide, it's really around the options stuff. So I'm going to go over here. I'm going to click on the options flow, the real-time feed. And basically, this shows us kind of like what's going on today. So this options flow, we have a relationship now with CBOE, the Chicago Board of Options Exchange. And they're sending us real-time trades. I say real-time, but it's kind of near real-time, and we get the data within 60 seconds. So it's not specifically real-time. If you're a high-frequency trader, it's not real-time. But if you're somebody like me, it's close enough. We don't delay it 15 minutes. It comes in as soon as the trade is made, but it could take 60 seconds or so. And what we've done is we've asked them to send us an event anytime that there is a trade that looks like a large institutional trade. So what that means is any options trade that has more than 1,000 contracts in it, where the volume is greater than the current open interest and the implied volatility goes up. And so we talk to them about various ways to look at this. And so what this means is that what we're seeing here is a pretty red day here for SPY. This is real time. I think the markets are closed right now, but if I hit reload here, throughout the day, this should update in real time throughout the day. And I can go through here and I can say, okay, SPY, the SP 500, a lot of puts, a lot of large put options, put contracts being bought, which would mean it's a negative sentiment indicator, obviously, because if you're buying puts, you have a negative sentiment. If you're buying calls, you have positive sentiment or bullish sentiment. So here we have, a lot of negative sentiment for SPY, which is the overall total market. A lot of it's negative sentiment, sentiment for QQQ. IWM is the small cap. But then you can look at some of these kind of individual stocks. DWAC, that's Trump's company, I believe. It's got a big call purchase here, $7 million in premium paid for that. So somebody bought $7 million in call options just before the closing bell. It looks like here. So that's a big, that's a big trade, right? For a company. You can go further down here. The point is that you can go through here and you can kind of tease out what's happening. This is all today's numbers, and this page goes on for a very, very, very long time. And you can find, companies that are, if you're trying to discover, you're trying to learn, you're trying to kind of find trading ideas. This is a really interesting way to do it. But rather, if you don't want to go through here and like tease all this out, we actually provide some leaderboards as well. So we have, let's take a look at the latest day for stocks. This basically sorts the day's trades. So this is for today, based on total net premium paid and kind of, when I say net call premium. So here's that one trade that was made for DWAC, $7 million. There was only one that we have on record. There were no put trades today, so there's no put premium. So the net call premium, net bullish premium was $7 million. You can go further down here. There's another one that's for $5 million for Rivian Automotive, and so forth. Okay. So this is interesting. So here's a company that's got 4 trades, total premium of $312,000. This is all today's data, 51 big events. You can also look at ETFs, latest day ETFs here. And you can see, okay, so here we have mostly negative sentiment. Here we have 42 million, net negative $28 million in premium paid for SPY options. So that's a pretty negative bet on the overall global, overall S&P 500. Likewise with QQQ, the bond market's got a negative, emerging markets got negative net sentiment, Russell 2000 had negative sentiment, and so forth. Where you can see that the short, ultra pro short has got positive sentiment. So that's actually a negative sentiment wrapped in a positive sentiment, right? Oil and gas exploration gets a positive sentiment here. Do you guys have any questions about this? I like looking at this. You can look at this on a daily basis, and if one day is not enough for you, then we also have 7 days, which is really kind of, I think, the real value, because it's hard to trade, at least for me, in one day. I'm interested in looking at what's taking place in the last 7 days, and here we can see Netflix, big winner, $30 million trade for Netflix call options right here. One trade for $30 million in premium. ConocoPhillips, here's the DWAC again, and so forth. And this to me is probably, this page right here, the last 7 days for the stock options flow leaderboard, is probably one of the most valuable pages that we have for predicting future price movements, because this is really focused on options. Options markets are considered to be the smart money, and we're looking at large block trades of over 1,000 contracts. So it's going to be institutional money that has a lot of budget to do research, and they're actually putting a lot of money on the line here. Okay, go down here and look at the negative sentiment for these guys. Who are the big losers? Tesla Motors, big loser. Simon Property Group, and a couple others. And Apple has actually been a big loser for a very long time. I've been checking this for the last couple of weeks. There seems to be a lot of call options, put sentiment, put premium being bought on Apple, and so forth. Okay, questions about this? I haven't seen any questions about this yet. How is the rank? So we're ranking this by net bullish premium. So all we're doing is we're adding the call volume, we're subtracting the put volume from the call volume. Okay, that's how we're doing this. So we get the net premium. This number here, the bigger the number is, the more bullish it is. If I sort this, turn it around, this is a very negative sentiment for Tesla. This is a very bullish sentiment for Netflix. Okay. We also have some put call ratios, and I'm going to spend a little bit more time on reworking this, but because there's a lot of zeros in here. But if I were to go down here and say, look at this put call ratio top bullish, the highest. This is a bearish indicator, because a high put call ratio means there's a lot of puts versus calls. You can see that these are all very, very negative sentiment situations here, and you can see that they all have to do with bonds, mostly with bonds, which suggests that the options market has a very negative negative outlook for bonds right now. This bond ETF is got a put call ratio of 1,400. Short treasury bond, intermediate corporate bond, floating rate treasury fund, corporate bonds, another. So this is really kind of helping you understand what the macro world or what the financial markets think of these macro indicators here. Questions about this? Personally, I think this is really, really helpful for understanding the overall financial markets, but I'm going to keep going here. So we talked about the options here. We've also got some interesting options information on, yes, putting the put call ratio in the options. Yeah, it's a good idea. It's something that we're probably going to look at as well. But let's go back here to this 7-day stocks page here, where we were at. Well, let's take a look at Netflix. I'm going to click on Netflix, and I'm going to end up at this stock options flow page. And this is, if you're on the Netflix page, or any of the Netflix page, you can actually get here by clicking on options flow, and it'll show you this page here. If I change this up here to be Apple, Apple's going to have a little bit more history. You can see that there's a lot more history here for Apple, and you can kind of see like it's been changing from positive to negative sentiment and so forth. But one of the things that's interesting also is I can say, let's take a look at the options itself, at the put call ratios, because besides the options flow, the put call ratios are also very interesting. So, as we said before, a put is a bet that the price is going to go down, and a call is a bet that the price is going to go up. So when you divide the total number of puts by the total number of calls, the open interest outstanding, you'll get the put call ratio, and that gives you an indication of what the overall kind of sentiment is based on open interest. In this case, the put call ratio is 0.084. So that's actually bullish, right? That means that, for every 100 puts, there's 84 calls. Now, it should be the other way around. For every 100 calls, there's 84 puts. If this number is from 1 to 0, it's bullish. If the number is greater than 1, it's bearish. And so as we go through here, we can see on any given day. Now, this volume is not the full volume. This is just the volume from the SIBO. Okay, so we're actually going to be licensing data from the other markets as well. We'll have full volume here, but it's not the full volume, so don't think it is. But you can take the open interest and the call interest and divide it by the put call ratio, and then this becomes really interesting. Okay, so you can see that this is mostly positive, and yes, it's positive indicator, positive put call ratios, positive sentiment for all of this time. You get further out here, and you can see things like for the expiration date, which is 2/4, which would be this Friday, you can see that the put call ratio changes. So there's people that have believed that the sentiment for the short-term sentiment for Apple was actually somewhat bearish. Okay, you can see that on January 10th, the put call ratio was 1.28, which is a slightly bearish sentiment. You can go down and look further out to the 11th and also see that, at one point it was bearish. Let's keep going further down here. This is as of today, or as of a couple of days ago. Yes, for the 18th. But let's look at some long dated options out here. Let's look out at 7:15. We have a slightly bearish sentiment for Apple. So if you look at these, so basically what we're looking at is we're looking at the expiration date for these options and looking at the put call ratio for them. And it tells us, it gives us a sense of what the options market believe the overall price is going to do based on the expiration date. So here we can see that for, at least for July, the financial markets believe that the price is going to be down a little bit and so forth. Is this helpful? I'm not sure if I'm explaining this very well, but this is I think this is a really powerful way to visualize what options markets are going to think about companies. Let's take a look at Netflix again. Apple might not be a very good example of this because I think most people believe it's going to do really well over a long period of time. But if you take a look at Netflix, here we can see it's bullish right now. And as we go further out, what does it look like further out? 1.2, 1.18, pretty good so far. Okay, questions about this? We've also got all the Greeks on this page as well. We're going to move this around a little bit, but if you're interested in, if you follow, the option Greeks, then we have all of that information here for you. We'll probably put it on its own page and allow you to chart it along with implied volatility. Questions so far about any of this? Okay. Do you guys have something that you want me to talk about next? Because I've talked about, the short interest and the owners and the dividend data on a whole lot of other webinars. Actually, what I'll do is I'll talk about the dividend data actually, because I think it's actually, I know what I'm talking about. Something that I think is really interesting. We started doing this funds flow for the world, and basically, we cover the entire world in terms of ownership data, and we started breaking this data into by looking at companies. And for example, we don't have the U.S. on here because the U.S. is kind of implied in the fact that Fintel is a U.S.-based company. But if we go in here and take a look at like Great Britain or the U.K., what this page shows us is actually really interesting. And I don't know if anybody invests internationally. I personally invest in U.S. companies and Canadian companies in the U.K. and Germany and Japan, Hong Kong. I feel like there are good deals to be found all over the place, and a lot, especially in like Japan and even mainland China and in Hong Kong. There's some really interesting opportunities there. And so let's take a look at Great Britain here. This is basically telling us, in all the companies in the UK, which companies have got the best and the worst kind of fund, I call funds flow. And that would be like changes in ownership or changes in interest, changes in sentiment by funds. And so here, let's take a look at this. So here we have a company where the prior disclosed owners was 58 and the current owners is 72. So we look back 1 quarter, so exactly 90 days. 90 days ago, the owners were 58 and now they're 72. That means that the number of owners, distinct owners, increased by 24%. Looking at the number of owners, I think is a really interesting approach because everybody comes to their own conclusions, everybody does their own research. And so if you find a number of different funds, these are institutions that are all simultaneously or within this short time period increasing or adding positions, then that's interesting to me. You can also see that their allocation, their current allocation is 0.2%. Now that might not seem like a lot, but a lot of funds, will hold, 500 or 1,000, different companies in their funds in order to reduce volatility. And so we look at the overall allocation change for companies that are holding for funds that are holding this company. In this case, the current allocation is 0.21%. That's an increase of 0.17%. So that means the actual change was 432%. Okay, that's huge, right? The average allocation of funds in life sciences developments increased by 432% in the last quarter. So we take this information, the change in owners, and the change in allocation, and we sort that against all the countries, all of the companies in all the countries in the world. In this case, the global rank is 112. In this case, the country rank is 1, and we give this score 96.83. So if you're interested in another way, so what basically what we're saying here is if you're looking for ideas on companies that are being accumulated by funds, you can go to this page here and look in the country that you're investing in, and find the companies, sort this by however you want, and figure out who's being accumulated and who's not. So the question is there a specific reason we don't add the current price is not on any of the list? There's no specific reason, actually. It's certainly something that we can talk about, but for me, I try to, I'm not as interested in the current daily price. I'm interested in the core underlying data, the ownership score. The price to me, whatever the price is today, isn't as interesting to me. But we have had questions about that. We've had requests for that. So I will look at that. It's always a question about how much data can we fit on a page. And so I try to keep it pared down and focus on just what is important for this particular table. But that's kind of just my opinion on this. Are there any other questions about this data, like how it's calculated and so forth? Does anybody want me to talk about anything else? Let's talk about dividends here. Just like we have ownership data for the world, we also have dividend data for the world. And so I'm going to click on this dividends world, click here. And what we have here is basically another leaderboard, just kind of like what we just saw, focused on finding the best dividend opportunities for dividend investors. And so in this case, what we look at, we look at the dividend yield, okay. 48% is pretty big. We look at 14% is also pretty big. We look at the dividend growth for 3 years. This should not include special dividends. I don't believe it includes special dividends. But obviously this is, as I always say, this is a starting point. This is not an ending point for making a financial decision. You should always go back through and do your research and make sure that this is, that what you're seeing here makes sense to you. So we look at the dividend yield, we look at the 3-year growth, we look at the cash payout ratio. The payout ratio, typically the traditional payout ratio is the amount of, is the net income per share, earnings per share. It's this percentage of earnings per share that is used to pay out the dividend. Okay, so in a situation where you have a earnings per share of $1 and a dividend of $1, the payout ratio is 100%. That means the company paid out 100% of its earnings and dividends. Obviously, you typically want to see situations where the payout ratio is less than 1. You don't necessarily want a company where the company is paying out more than its income in dividends. In that scenario, what you might find is that a company has been paying out a certain dividend, let's say 25 cents a share, for a bunch of years, and the company's on hard times, and the income perhaps is negative, but it wants to maintain paying out the dividend. So it goes ahead and pays out the dividend at 25 cents, but the actual income is negative. So then you have a situation where the income, the payout ratio is actually, more than 100%. You don't typically want that. You typically want companies where the income is much greater than the dividends. Now, that's the traditional payout ratio. But what I'm interested in is the cash from operations payout ratio. And the reason is because dividend is cash out, and cash from operations is the amount of money, the actual amount of cash that's generated from the operations of the company. For me, for my money, this is most important because you want to make sure that the dividends that are being paid out are sustainable from the cash that's being generated from the actual operations of the company. You don't want a company where they sold some real estate, and they're paying dividends out of that real estate, income, or that real estate, the cash in from the real estate, or whatever. So that's what this looks at. It looks at the cash from operations payout ratio, and that goes into this overall dividend score as a way of trying to make sure that the earnings quality for the company is good. So this is basically a list of the top dividend candidates worldwide right now. And it's in Hong Kong, and the top, look at the top numbers here: Hong Kong, Canada, Hong Kong, Japan, Hong Kong, US, Hong Kong. Now, this just goes back to what I was saying earlier. I find that some of the best investments for me are not even in the United States. They're in other capital markets. And I think most brokers now, E-Trade even will allow you to invest in Hong Kong and Canada and Japan and so forth. So, if you're looking for interesting and new places to invest, this is a really great start. And I would highly recommend you to take a look at this. If you have any questions about it, let me know. And I will do my best to answer them. So let's talk about the Fund Intersect tool. This is a great idea, and I appreciate you bringing this up. This is basically the portfolios here, the portfolio builder. And we're probably going to rename this because it's kind of confusing. People don't always know what, people have their own portfolio. People have, it's a kind of a bad name to call it a portfolio builder, but the Fund Intersect tool is probably what we're going to rename it to. And the idea is this: if you take a bunch of different funds and you look at their positions and you do an intersection of them and find all of the companies that are commonly held amongst those funds, you can oftentimes find really interesting ideas for investments. And so, here's an, and you can do this with your own favorite fund. So you can go out and pick your favorite hedge fund. So I could say 0.72, I could say 0.72. Let's add this guy. Okay. Now let's say starboard value. Okay. Let's search for this guy. Let's add this guy. Okay. Now let's go back. Now what this is going to be, it's going to show me all the companies that are held by both 0.72 and starboard value. These are two well-known hedge funds in the United States. So this tells me all the companies that are held by both of those funds. Okay. And so I can just sort by current owners here. It actually isn't even the fund, all the companies are held by both. It's all the companies held by all of them. And I can sort by both. So obviously current owners greater than 2 is the ones that's held by both. And these are all the ones that are held by just one company. Okay. So this is really interesting. Like this can be really powerful. Let's clear this out here and let's take a look at some of the kind of the pre-built portfolios I have. So if you're interested in gold and silver, for example, or this kind of theme, you can click on the gold and silver kind of fund intersect, the model portfolio here. And what you'll find is that if you click on here, go to the list of funds, here are all the funds that I found in our database that we have data for that include gold and silver. Okay. And what I've done is I've created a big fund intersect of all those funds. And this is what I came up with. The company that has 19 owners is SSR Mining. I don't know who SSR Mining is, but obviously 19 of our funds all have a position in SSR Mining, which would suggest to you that they find something interesting in this company. And it's got one, it's added one owner in the last quarter. Okay, questions so far? Let's take a look at small cap growth. Let's see what the small cap growth companies are looking at. So here you have a scenario where 66 of our small cap growth funds have a position in NeoGenomics. That's more than anybody else except for Fox Factory Holding. And Fox Factory Holding actually declined the number of shares a little bit. Okay, so if you're looking for companies, looking for ideas, you can talk about, you can look at these fund intersect tools, kind of model portfolios. United States mid-cap value or value. Okay, let's see here. And if you don't like these canned, intersects that I've done, then you can create your own and save it as well. Here you have Zimmer Biomet Holdings being the the most popular US mid-cap value stock. Okay, questions so far? Any more questions about this? Okay, so we're 36 minutes in. I've talked about the options data here. I've talked about the dividends data. I've talked about the fund intersect tool. Anything else you want to hear about right now? If not, I'll go ahead and start kind of winding this down. We talk about alerts and settings an alert for change in the borrow fee. Okay, so we have a lot of alerts. We have we have all these global alerts here. And then if you follow a company, we can send you email alerts. But a lot of people want custom alerts that I don't necessarily, I'm not always able to do. I'm not always able to accommodate that. So let me show you a way that you can create a custom alert that is basically will alert on your own kind of terms. This is the Fintel workbench, and I don't normally talk about the Fintel workbench on this webinar because I do a whole webinar on the workbench next week at this exact same time. But basically, oh man, another technical glitch here. Hang on one second. Okay. Share screen. Okay. So basically, what happens here is this basically allows you to create a query using a complex and rich query language. And so a lot of people want to say, help me understand, they want to create an alert if, say, the short squeeze score for a company gets above a certain thing. Well, this is basically creating a screen. So I can say short squeeze score greater than 95. And if I say, get my results here, you'll see that this is going to provide you a list of companies where the short squeeze score is greater than 95. Give it a few minutes to work here and you'll start seeing them come through. Now, if I want to create an alert for this, for any time a company's, here, there's one of them right there. Now, let's say I want to create an alert anytime a company's short squeeze score gets above 75. Well, the way we do that is we just create a screen that filters for that scenario, and then we save it. Okay, if I'm going to click save here, it's going to give me this kind of page here. I'm not actually going to save this. What I'm going to do is I'm going to go over here and I'm going to click on screens. I'm going to look at one that I saved before, which is, say, this one. And what happens here is we're going to save the screen, and then every day, this is a really complex screen here. Every day, when we save your screen, every day this screen is going to run. We're going to run the screen for you every day. And anytime something new shows up, we're going to put it in the portfolio in the results. Here's the results here, the current holdings. And then what you can do is you can click on an email alert to email you anytime something is added to that screen. Okay. So what this means is that I saved this a couple days ago, and it runs every day. The last time it added something was on the 28th of January, and it added all these companies here. It added a whole bunch of companies actually. And when it adds those companies, it's going to email me. Now that I've turned on email, it's going to email me an email that says, hey, we just added this company. And so if you're looking for, how did I go to the screen? Hang on one second. So if you're looking for a way to create alerts, this is a really, really easy way to do it that doesn't require any intervention from me on the engineering side. So how did I get to this screen? So I started off at the workbench and I created a screen, and then I saved it. I didn't really save it in this webinar, but you can say this is my screen, Wilton's test strategy, okay? And then save it. I'm not going to actually save it. When you save it, you're going to end up on this page here. It's going to be like Wilton Rising Hoover screen. It's going to be your screens. It'll be like David's screens, okay? And you'll see it here. So I'm going to click on screens and I go to, your name. And these are all the screens that you've created. And you can find the one that you just saved and then enable the alerts. It should not send you the entire list. I'll take a look at that. If you enable the alert, it should send you just the new ones. If it's sending you the entire list, then it's a bug, and I will look into that. But you can see here, there's some new positions here. Okay, questions about this so far? And you can see some of the kind of more interesting calculations and queries that I have here. Hopefully this is interesting to you. I don't believe actually that you can do this kind of query on any other website that I'm aware of. Something really special that we've created, and I'm pretty excited about it. Okay, so it's 40 minutes after the hour for me. Any other questions? Anything that I haven't gone over before that you'd like me to speak about? Okay, so did I take on the Teams page? The Teams page is still up. We're going to work on the Teams page again soon and kind of get it back to good order here in a bit. I'm going to go ahead and put this. I'm going to edit this down and get rid of some of the technical difficulties from this video, but I will have this video up on YouTube. Let's say in about 24 hours, and so you guys can come back and kind of review everything that we've talked about if you want. If you go to YouTube and just do a search for Fintel webinars, you'll come to our page and you'll see kind of all the kind of past webinars that I've done as well. So again, thanks for being here. I always appreciate the questions. Sorry for the technical difficulties. I don't know what happened, but I apologize for that. And I'm glad you guys showed up. I'm glad to be doing this. Love the questions, and I always love an opportunity to talk about what we're working on and talk about new features and things that we're working on. So again, thanks again. Look for this video on YouTube in the next day or so. And next week, I'll be doing a full deep dive on the stock screener. So if you want to learn more about this kind of thing, show up here again exactly 1 week from now, and we'll talk about that. And then of course that will be up on YouTube as well. So I hope you all have a great day and have a great evening, and talk to you soon.